Hello friends, welcome to bispsolutions.com. My name is Ali. So this is going to be a financial consolidation series and we are going to discuss today is investing accounting. A company can have multiple subsidiaries and company also can invest in multiple other companies in their stock. So today we are going to discuss the investing accounting of fair value method. There are the three ways to account for the ownership in interest. When we have 0 to 20% or less than 20%, when we have a less than 50%, or when we have 50 more than 50%. So this is the first method where if your company owns between 0 to 20% of another company stock, then it's called the company uses the fair value method. This is also called the fair market value method. So in this example, if you can check this is a 20% you own and 80% owned by others. You own only 20%. So we'll check in detail with example. So here we go with example. So when if your firm buys stock in another firm and the ownership stake is less than 20%, then it's called that in the investment in balance sheet is called the market to market. You need to record the unrealized gain or losses that affect the net income as well. For example, your firm buys 4,000 shares of Shoeshine Inc. at rate of $50 per share. So there are the hundreds of thousand shares outstanding for the Shoeshine Inc. So how much you own? First of all, you need to calculate for the same that we calculate here the hundreds of thousand and 4,000. Your stake or your ownership is 4,000. So if we divide it for the same, it's become the 4% only. So your ownership is 4%, and according to this rule, we need to go for the same. It's like it's going to be a fair value method. And is your investment in Shoeshine. Like first of all, you need to record is journal entry here. The investment in Shoeshine Inc. Okay, here we multiply with 4,000 multiply by 50. It's become 200 of something. So step first, we record the investment, and of course we paid cash for the same. So we got that credit the cash. So when it comes to the realization, that you check the price, okay, very next day or after some time, that the price of share increase by 63. You purchased the same at 50, but now the price is 63. So you need to readjust or fair value adjustment for the same for the unrealized gain, because you have not sold the your shares yet. So you need to record the unrealized income, net income. So in the same way that we calculate for the same, it's become the 252,000. So we record the unrealized fair value adjustment of 52,000 because we already record for 200,000. So remaining the amount is 52,000. So we record the same as debit the 52,000, and it goes to from the non-realized net income, the second step. So later on that day or next, when you decided to sell out your shares. So when you sell out the share, on the time the share price was $57 per share. and you have 4,000 of shares. So we multiply 4,000 by 57, it's become the 228,000. So when you sell something, you receive the cash. Okay. So in the same manner, you receive the cash of 228,000, where you need to minus, because it's a unrealized gain. It's already record. So you need to remove the same. So for removing that, you need to enter the same entry, debit or credit the same of 52,000. So you credit the same fair value adjustment that's recorded before unrealized gain is 52,000. Then the investment, original investment you have invested 200,000. Okay, and there is a unrealized realized gain now, because you have already sold out your shares. So you realize 28,000 of gain. That's realized, and it's in income. So your net income also increase if you receive dividend from your investee, like a dividend when company you invested and company made profit. So they want to share the same profit with the shareholders. So they share the same. If they share the same, your net income will increase. Okay, this is the main difference between the fair value method and equity method. We are going to talk soon in upcoming videos. If you were to receive the cash dividend from Shushan for 5,000, you need to debit the cash of 5,000 and credit dividend revenue of 5,000. So this you are going to increase your net income by 5,000. So that's all for today. Should you have any question, please call or update to us or visit to our website www.bispsolutions.com. Thank you.